Hello traders, the title of the video is how to apply the wave principle by keeping it simple. Alright, so if you have been applying the Elliott wave, you will notice that at one stage the Elliott wave analysis may become a little bit complex or may not make any sense at all. Alright, so you will count your wave, but you will not be satisfied with your wave count. Or you may notice that the price structure is not validating your wave count. So you are in a doubt about your wave count and you are wondering whether you should accept that wave count or not. All right. So this is a challenge for all Elliott wave traders. So if you are experiencing that situation, do not think that you are a useless Elliott wave trader. Everybody, all right, even experienced Elliott wave trader will come across a price structure that is quite challenging. You'll also notice sometimes, that's why I leave line on my chart sometimes, because you're looking at the chart today, all right, you see it as you see, but if you look at the same chart tomorrow, your judgment sometimes may change. No, it's not always the case, but sometimes this is the situation. So you may count your wave today. This is your primary wave count, preliminary wave count. And then a few days later, you look at the chart and then you change your mind. You say, no, I will prefer, this wave count instead of the first wave count. So you are, in a bit of a doubt about your first wave count, all right? Now, as always, all right, if you are in that situation, you need to keep your wave count, simple. All right, this is about how to apply the wave principle by keeping it very simple. So I have a chart here, and I'm in a funny situation because first, all right, so this is a practical demonstration about what's going on. All right? I'm on a monthly chart, so traders say you're always on the monthly chart because it's my preferred time frame. So I can do this on a weekly chart, but I prefer the monthly chart. So the first thing that comes into my mind looking at this chart, by the way, the financial instrument is Sunshine Heart Incorporation. So this can bring you some sunshine. All right, it's a beautiful name. So the sun is shining today. This is funny also. So we don't have a good sunshine in London. So now here we are analyzing a financial instrument that is Sunshine Heart Incorporation. Beautiful name. The epic is SSH. All right. So now as I'm looking at this chart, the first thing coming to my mind, I'm wondering, is that all I can have as a data? Do I have enough data? So the first challenge is that if I don't have enough data, my wave count is just a piece, you understand, a portion, right, or a section of a bigger, price action. But because if I do not have enough chart, so suppose we were here, suppose you have only on your chart, the price action from here to here. So that's the only thing you're going to use to count your wave. And if you have only the data from here, that's the only information that you have. Now, maybe this company, came into business, was listed, in 2012. So if they were listed in 2012, that's all we can have, But suppose they were listed, in 2008, and now we don't have that data. All right, so my wave count, will not be complete because I don't know what has happened on my left-hand side, and that data is missing. So that's the first challenge, all right? But in that situation, we just work with what we got, yes or no? We just work with what we got, all right? But it's good to have enough data, very important. As I'm looking at this chart, I'm saying, all right, so price went down, as I told trader before, we do it like a little chart. We keep it very simple, and then it went up all the way up here. But you see that there was a shadow here, so I'll stop here. I'll leave it here. I'll ignore the shadow on top of this candlestick bar because I'll give priority to the closing price. Okay. keeping it very simple. Then it came down like this. So this move, 1, 2, 3, stop here. In my mind, it's a correction. All right, it's a correction. Why is correction? Because it's free, finished. All right, it's free. And also you can see that if we put this one here. So you may, so a trader also asked me, there was, by the way, this is a good comment. Trader asked me to record a video how I deal with the shadow and the tail of the candlestick bar when I'm counting wave. That's an excellent question. So don't think that I forgot you. So if, you know, few weeks later I did not post that video, remind me again in the comment section. It's a very excellent question. So the shadow, we'll be talking about them. So here it is. So all these waves are overlapping. In fact, you see here. So this is a correction. So 1, 2, 3 is a correction. The question is, what is it correcting? So that's what I said. Anytime you say it's a correction, the next question is, what is that corrective wave correcting? A corrective wave will always correct something. All right. So now we don't have that data to know what is it correcting. But if this company came into business and opened somewhere here, and then ran all the way up here because of the initial, market participant that bought the stock the first time, they are listed, price went up, and then they say, all right, it's overbought, the stock shouldn't be priced at that price, and then it came down. So that will be the first reaction, all right? That will be the first reaction, yes or no. So then we have 1, 2, 3. Here we will say it's a correction. Why is it correcting? We don't know. But look carefully, my friend. Then if I move it a little bit up here, that question will be answered now. So here we are. I put it another one here. So price went up, yes or no? So I put it again here. All right. So now that I look at the chart like this, I'm wondering, now I have 4. Why is it correcting? The first one, 1, 2, 3. So one scenario is that probably this company did open in 2012, all right, and ran all the way up here, and then came down. That's the initial price move. So they came into the market. I'm assuming, all right? So I'm assuming that Sunshine came into the market 2012, all right? And then price dropped down, okay? All right? So that's the initial move, all right? So that's the first reaction, all right? So put that one into orange, okay? I might zoom into it, all right? So that's the first reaction. Price dropped down, they opened, they come into the market, price dropped down, boom, 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 went up, and then came down to this point. Now, if I assume that, my wake count start making more sense. So I'll say the first reaction, now this move, 1, 2, 3, is correcting what? So corrective wave, 1, 2, 3, is correcting the first reaction. What? First reaction, 1, 2, 3. That's the correction. So this 1, 2, 3 is correcting the first reaction. Understand that the discussion that we are making, we don't know whether this company was listed on 2012, but if it was listed before that, which means our wave count, we will be wondering. So the exercise that we are doing, so you are in front of a data, or somebody send you this chart and say, George, analyze this chart for me. All right? But suppose you don't know anything about that stock, or you don't have enough data for that stock, what's going through your mind? How will you present that Elliott wave analysis to that person? You want to keep it very simple. So few things that you can do. Anytime you see a corrective wave, you can say, what is it correcting? That question is very, very important. That question will keep your Elliott wave application very, very simple. All right? It makes sense? So now the price did something again. Let's move on. Let's see. Came down like this, like a little child will put it. and then went up a bit to retest the moving average 14, and then D below it. Again, that's 1, 2, 3 again. All right? What's going on? But if we put our line here, our initial price reaction, the support level, so price drop down, boom, 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 that's the support level at $108. Okay? All right? So price came down, you see, it came 1, 2, 3, but then he rolled almost horizontal to retest this level. All right? Now, personally, I believe this new 1, 2, 3 is bringing the price to this point. But because the price did stop here, because of this support here, professionals were acknowledging that support at $153.83. Am I talking to myself, this one? By the way, feel free to disagree with, okay, my blah, 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 okay? All right, here it is. So there was this support here, price drop down 1, 2, 3, acknowledge that support level, and then went horizontal, and then you see gently with 2 candlestick bar drop down to the next key level at 108. So that new 1, 2, 3 is bringing the price back to this point, which is in fact a cycle point. Feel free to disagree with that statement. All right. So you can see that this wave count is not easy. It's not straightforward. Now, in that scenario, we need to keep our wave count very simple. I recommend to traders to stay with me and to watch the full length for this video, because it's going to become very, very interesting at the end. And you will see very soon why I use the word keep it simple. All right? So now, this is my wave count. Say, initial price reaction, 1, 2, 3, correcting this, okay? And then we have, and again, 1, 2, 3, which is bringing the price to the cycle point. This is a double retracement. All right? Then the price, you can see it bounced up a bit. This is a reaction. Remember what I said before? Anytime we see a double bottom chart pattern, all right, did I say that? Okay, we can cover the price action, yes or no? The reaction that broke the price to that zone, yes or no? Or we can cover this one, because it formed a double bottom here. Let's cover it for a while. So initial price reaction, 1, 2, 3. Now we are back to the starting point. Okay? But something else. Let's remove this again one more time. Let's remove. Where am I doing? Hold on a second. Okay. Now we are. Let's put this back. You see, it's quite challenging this wave up. Now here we are. So from here the price bounced a bit. Everybody can see that, and then it came down. Just roll it down. Okay. So what's going on here, my friend? So if we start here, we'll say 1, 2, 3, 4, 5. Yes or no? All right. And now, so you'll be thinking, all right, George, in fact, this is what? A zigzag pattern. George, are you blind or what? Probably there was some price action here, which we do not have. And then this one drops down. And then we have 1, 2, 3 here, followed by 1, 2, 3, 4, 5. It's a zigzag pattern, George. The first part of the zigzag pattern is the A part of the zigzag pattern that we color in orange, which was in fact a kind of a sharp move down, George, and then 1, 2, 3, followed by 1, 2, 3, 4, 5. So as you can see now, at this stage, all right, I know that, so you see like this, so you are satisfied, are you satisfied with this, okay, illustration that is a zigzag pattern? But now we don't have anything here to tell us that what that zigzag pattern is correcting. Are we missing some data? We don't know yet, okay? Okay? Personally, all right, so you have this wave, can say it's a zigzag, but there's a portion missing. Or you may say that, okay, George, There are this move down. This is the initial price move after the IPO, followed by 1, 2, 3, and then 1, 2, 3 to the cycle point. Right? Now the price D below that cycle point, and it's going down. Okay. So as an Elliott wave trader, you are counting your wave. What's the purpose of your Elliott wave principle application? It's to make excellent decisions and to forecast the market. But now things are becoming a little bit complex, a little bit difficult. You want to keep it very simple. Now, if you face a situation like this, you have to make a decision. All right? And that decision is to use, for instance, trend lines. So let's start drawing trend lines, Going to draw trend lines. So all I'm doing, I'm connecting the top of this shadow to this candle here. See here, there is this red trend line connecting this point and this one here. Let's color it now into red. So I say, all right, this wave count is not helping me very much because I can see that there is a double bottom chart pattern here, but because market participants do not believe that there should be a trend starting from here, all right, they continue to sell the stock. All right, so I can say that. I may also say that probably there was a data here and we have a zigzag pattern that is being formed here. That's another scenario. So am I wrong? Am I right? I want to keep it very simple. That's it. So now by drawing the trend line, so there is a trend line. Anytime you see a bearish trend price stuck below a bearish trend line, a red trend line is indicating to us that the market sentiment is bearish. So the cycle point, I'll color it also into red. What I'm doing now, I'm trying to get something out of my wave count. All right. As you can see, the application of the Elliott wave for this chart was not straightforward, was not easy. But I need to get something out of my wave application, Elliott wave principle application. Therefore, I want to keep it simple. What can we see on this chart a part of our wave count? We can see a triangle. Personally, after trying to count a wave, and with all the doubt that are arising, all right, I want to keep my Elliott wave application very simple. Therefore, I will just say, look, guys, at this stage, this stock, all right, is now below a triangle. Which triangle? The red triangle. See here, what the top, below, and now here we put this one here. There is a triangle, all right. I think everybody will agree with that. So we have a triangle, all right, in place, the red triangle. So if a price D below the triangle, what usually takes place, people will measure the height of the triangle and they will project it down. You see that if you do that with this height, the price will go into minus, which is not practical, right? So you need to be reasonable in that case. If I don't want to use the full length of my triangle, because if I project the full length, the price will have a negative price, which doesn't make any sense at all. So therefore, I will divide that height into two. It's about making it more practical. So something like this, I will say that's half of my the height of my triangle, and then I will project it below. If that one also go into the negative price zone, I will use the quarter of that height of my triangle. So in fact, I will use the quarter of that triangle and project it down. Now, this exercise is to keep my Elliott wave count very simple. You see? So you may be wondering, George, what's the point of this tutorial? All right, very good question. The point of this tutorial, because I know traders are sitting in front of their chart, they try to apply Elliott wave, they understand the theory, and then when they go into the practical mode, they face all these challenges and they wonder what to do. This is one example of scenario how you can handle those situations. So now that I'm using a quarter of the height of my triangle, I know that there is a price target in a zone of now again. I'm outside, you see. I'm going to the negative zone again. Then I will divide it again, all right? So the price, we don't want the price to go below a 0, all right? All right? So somewhere there, we reach the bottom, completely bottom of that level. So it's not going to go to where it is now. So we need to adjust it to where the price is, all right? In the zone of $1. So if you see, even it's showing negative price now. It shouldn't show negative price there. But just remember that the price now at $2.04. All right? Okay, but now that we have seen this, all right, all I can say to traders, I see a triangle, the price below the base of the dark triangle. If I want to be bullish at this stage, I'll say to traders, priority to bullish signal above the red line 10871. A D below that key level, that is a key support level. If on a monthly chart a candle C bar came and closed nicely above that 10871, that will be the first bullish trading setup. That candle C bar must close. That will be the first bullish trading setup. And then from there, we'll use a top-down trading method to trade it. If you want to buy at this level now, $2.04, we should use, okay, a stock portfolio, all right, which we buy and hold. But before one can go and buy and hold, what's the first step? We need to go to Google Finance, all right? Check that stock. 1 second, please. Let's go quickly to Google Finance. You want to check, okay, the financial, the economy news, why the market is not buying this stock, why the stock went down almost to $1 zone. You want to know. So you need to read the economy news relating to, okay, that stock perform Google Asset test, all right? Check the financial, all right? Very, very important, yes or no? So you will not just go and buy that stock, Sunshine High, that is here, all right? You want to check also the competitor. This is about related companies. Can you see that? Can you see? Related companies at Google Finance. You check the economy news relating to that stock, what's going on. Sunshine provide business update regarding execution of strategy. Look down, read everything, okay? Ain't no sunshine when your money is gone. Like, you want to know what's going on, all right? Why investors remain confident on Sunshine Heart, and so on, all right? Sunshine announces strategic realignment, and so on, and so on, and so on. You want to read the story, why, okay? No one is buying this stock at this stage, all right? Okay, so personally, with the area wave count becoming a bit, okay, complex, right? So also we can go now, let's hold on a second, because I don't want the video to be too long. Company summary. Hold on, please. One second, please, traders. I'm still here. Oh. Okay, traders, I'll leave that one for now, okay? I'll leave it for now. And because I don't want to spend too much time on this, okay? So the point I want to make here is that personally, I will accept that the stock dropped down. That's the first reaction, followed by a correction, 1, 2, 3, and another double retracement, bringing the price to the cycle point here. Now, the reaction that we see below the level for $108 71 is just the reaction of the bearish traders because the market, okay, does not believe that the stock should be at that price of $108. As I explained to you, I will leave I'll keep my Elliott wave count. I will simplify my Elliott wave principle application, relying instead on the triangle that is in place. If I want to buy this stock, the first indication that the stock is becoming bullish is that it should return back above, okay, the level of 10871. All right, so this is a little bit of blah 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 from my side, okay, just to show you sometime that the Elliott wave principle may not be useful to us 100% straight away, or may be useful only 50% of the time for us, depending whether we have enough data, all right, or the price structure is a little bit complex, and we have a dual, okay, validation. What do I mean by dual validation? You accept that the first validation is correct, and you also tend to believe that the second, okay, wave count is good. So the first one is that price drop down 1, 2, 3. Second one, and then from 1, 2, 3 down. That's the first, okay, Elliott wave analysis. The second one is that the price drop down fast, sharp correction 1, 2, 3, and you are thinking of a zigzag. Which one should you go with? That's the question. If you have that situation, you should simplify your wave count. Use other tool, the triangle for instance. Keep your eyes on the price. Is there other information that you can use to make a better trading decision? In this scenario, faced with that challenge, I'll rely on the triangle and the key level of 10871. But before I will pull the trigger, so to speak, I will okay, buy this stock. All right. I will go to Google Finance, okay, perform Google Asset check, read economy news, all right, check the financial, so I can make an intelligent, okay, decision, all right. If you have any question or suggestion, all right, put in the comment section, and in due course, I will be recording another video to answer your specific question. If you think that, Joe, this is another blah, 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 give us the thumbs down so I know that this is a blah, blah, blah. If you think that this is an excellent video, all right, feel free to give us the thumbs up and also share with your friend on Twitter and Facebook and also on Google+. We are the GSTW24 traders talking about how to apply the wave principle by keeping it simple. Happy trading to you all and speak to you soon.